perspective. Ashley has done a lot of work, not only just in corporate accounting and working in the business world, but also working with entrepreneurs. Many of her clients are business owners, people who own consulting firms, who own all types of service-based businesses. So she has many years of expertise with helping people think through tax planning and tax implications. So I want to give her an opportunity to share her background, and then we can get into our presentation for today. Ashley, why don't you tell us a little bit about yourself?
Yes, thank you, Isaac, and so good to see you. Hello, everyone. Again, I am Ashley Brooks. I'm the owner of Brooks and Associates Tax Consulting Services. I've been in the accounting industry for about 20 years, which I hate to say that out loud because it feels like I'm dating myself. But I've been full time with my business for the last 5 years. And being in the accounting industry, I will say I've learned to simplify things as I work with business owners and individuals. That's the core of my business. I'm really, really focused on tax education, not only helping individuals that work 9 to 5 jobs with tax strategy and finding ways to maximize their dollar, but also working with business owners and helping them to, as we will talk about during this presentation, making sure that they're compliant, making sure that they're aware of what their requirements are in terms of being a business entity. So anything that we can do to help support businesses, that's our focus.
Awesome, awesome. You mind give are you gonna do a presentation and just kind
Yeah,
of walk through some things? Okay. Why don't
yeah.
we go ahead and jump into your presentation. And if
Okay, let's
anyone has any questions, feel free to drop your questions in the chat or raise your hand. We can acknowledge you. Ashley will go through her content, but we can get some questions answered along the way, or we can get questions answered at the end of the session.
okay. And you guys can see my screen, right?
Yes, yeah, everything's good.
Okay, awesome. So we know that the focus today is protecting money when it comes to taxes, and we're focusing on businesses. I've already given you guys a little bit about myself, but the big component that I didn't hit is our focus is on tax preparation, tax planning, bookkeeping, and business consultation. So any questions about filing, you guys will be surprised at how many people are not filing their taxes on an annual basis. I've worked with businesses, and I mean, especially during this time, it's peak season right now. And I will have businesses reach out to me and they're trying to get tax returns filed for the last 2 or 3 years. And the culprit is they're working with lenders and they're requiring tax documents. So that's something we see all the time. Tax planning is an area that we focus on because if you have a profitable business, which I'm sure each one of you do, if even if you don't, you're just starting, you're going to get there, and when you get there you're going to start to owe taxes. That's where the strategy piece comes in, and that also plays a part into the bookkeeping. Every business owner, even if you're doing it informally, you want to make sure that you're tracking your income and expenses, because as you grow, especially working with these government contracts, you're going to need those financial documents, and business consultation is something that we focus on because we'll and I attended the session earlier and business entities were discussed, but during the consultation, you got the legal side as was discussed during that time, but you also have the tax side. And so as business owners, you guys have to understand both. And ultimately, the decision is yours because you are the only one that knows where you want your business to go. But being able to talk to an accountant and an attorney to look at the pros and cons, you have to do that as your business grows. So our desire is to help to educate others. We're looking to motivate, continue to help expand and build wealth as we continue to grow our client base. So this is something I wanted to put in here because this is a common thing that I see as business owners start and as they continue to grow their business and they're looking for whether it's contracting opportunities or lending opportunities. And I want you guys to take notes as we're going through this. Jump in the chat. I don't want this to be like a lecture type of presentation. If questions are coming up to you as we're kind of going through this information, feel free to put them in the chat. I can't see the chat, but we definitely want to kind of just talk through things. Like I said, I'm big on simplifying. So, three things that I want you to focus on when we talk why are taxes important. The challenges that businesses are facing every day is lack of planning, unmanaged taxes, and compliance impact. when we think of lack of planning, business owners are overlooking strategic planning. I see it all the time. And that lack of planning is helping them to not foresee challenges and they're losing opportunities. So when I say lack of planning, i.e., we're in tax season right now, and I'm working with business owners trying to help them to scramble to get their books cleaned up by April 15th, which is 3 weeks away, or they don't even have their income and expenses all pulled together to prepare a return, and they're coming to me saying, hey, I need a return quick because I'm trying to get a lending opportunity, or I'm applying for this contract and they're requesting my financials or they're requesting my tax returns. So, lack of planning is an area that we want to overcome as business owners, because once you get the planning and being strategic in place, you're going to set yourself up for success, which leads to the unmanaged taxes. If you don't plan, you can't prepare for taxes. Taxes represent a significant expense that a lot of business owners are not thinking about. And people ask me all the time, why is that? And it goes back to a lot of us are coming into opportunities we haven't experienced before, and it's kind of our first time. So when you think of taxes, depending on the type of tax, and I'll get into that in the next slide, but that's an expense to you. And if you're not planning, like I said earlier, you can't be prepared to pay the taxes. And a lot of clients that I work with, they're putting themselves on installment agreements, or worse, they're just kicking the can down the road. And it eventually comes up and it bites them in the butt. There's no way to say it but that, because they're getting notices and they're owing and they don't know what to do to get themselves out of that situation. So by managing taxes, being prepared, planning, you're being able to manage your finances, and that's going to help to make your business profitable because you're preparing. And the last piece is being compliant. If you guys have, and I think I heard one person say she's been in business for since the 90s, so you should be very familiar with this. As a business, you're going to constantly get notices, whether it's from the IRS, whether it's from the Department of Revenue. If you have employees, it's going to be from the Department of Labor. Making sure you're in compliance is going to be key to your business. Without it, you're not able to grow and you're going to miss a lot of funding opportunities, and it hinders the business overall in terms of you trying to expand, and it can be costly because a lot of those notices, and it's happening a ton right now. Department of Revenue is an example where they're sending estimated balances. So these are not true amounts that business owners owe, but they're auditing their systems. And if they see that business owners have not filed prior year filings, everybody's getting a notice that has not filed, and it's automatically saying that they owe $500. They're tacking on $100 penalty, and then they're hitting you with interest. I've had some clients that automatically pay it, and then they'll come and show me the notice later. And now we have to kind of backtrack to see if we can get that money back, because more than likely they don't owe that amount. I've had some clients that they'll get a notice saying they owe $6,000 or $30,000. They're estimates, guys. So, one, please stay compliant. But two, if you're getting notices, work with a professional before you take action on those. So, this is one area I want you guys to take note of also. When we're talking about compliance, we're talking about deadlines. And the deadlines I want you guys to write down are quarterly estimated tax payment deadlines. One is coming up in 3 weeks, April 15th. This is when your first quarter estimated tax payment is due if you have made a profit January through March. Okay. So I'm gonna kind of Isaac or Darius, if you can kind of poll this part, because I want to kind of ask some questions. How many of you guys are single member LLCs, or you are a S corp or a partnership? And you can just raise your hand, or if you want to come off of mute, because it's a small group, so we can kind of talk through this. Okay, Isaac, I saw you raise your hand.
Single member.
Single member, perfect. So you guys, when we talk notices, okay, if you are profitable and your sole source of income is your business, estimated tax payments is something that you want to take a look at and work with a professional on. And these are the dates I want you guys to write down: April 15th, is the first one. June 15th is the second. September 15th is the third payment. And the fourth quarterly payment you have to make is January 15th of the following year. Now, people ask me all the time, do I have to make estimated tax payments on these dates? The answer as an accountant is always going to be it depends. It depends on how much profit you made. Okay. If you know that you're making, I'll say over $5,000 each quarter, you want to make sure that you're making those estimated tax payments, because if you do not, you are going to be penalized when it's time for you to file your tax return. Okay. Another date I want you to write down is April 1st. And for each one of you that raised your hand, single member LLCs, partnerships, S Corp, C Corps, you're getting a notice right now. You've probably gotten 2 or 3 at this point, reminding you that April 1st, your annual report is due with the Secretary of State. Okay. Single member LLCs, you only have to pay $300. S Corp is $70. So the price will differ depending on the business entity type. But if you miss this deadline, they'll give you a little grace period. But once you miss it, they will make your business inactive. I deal with so many businesses that are inactive when it's time for us to file taxes. And to be honest with you all, it doesn't come up until you're either required to submit information for that government contract you're working on. The bank is asking to see that you are an active business with the state, or you're going for some type of grant. So you want to make sure that you're writing these deadlines down, because if you miss them, it can be detrimental, especially financial, to the business. 2 other ones I want you guys to write down, because I noticed a lot of business owners miss this, especially if they are forming the business themselves and or not working with an accountant. So when we talk state compliance, this is with the Department of Revenue. You have your franchise and excise tax, and that's due April 15th. I tell everybody April 15th should be your second birthday. Like, you should not forget it. April 15th, your taxes to the IRS are due. And now your franchise and excise tax to the Department of Revenue is due as well. And that amount will vary depending on your business entity type. For all of my single member LLC business owners, I want to be clear on this. The amount you owe is only going to be $100. Nothing more, nothing less.
No comment.
Huh? Did someone say something? Okay. Okay. So $100 is the amount that you will owe. And I want to put emphasis on this because I've seen a lot of business owners complete this themselves, the franchise and excise, and they miss the deduction piece. And so it does this calculation just based on the profit. And I have one client right now, I'm working with them. They owe $30,000 to the Department of Revenue, which is inaccurate because they truly only owe $100. But because they tried to do this themselves, they missed that deduction. So I'm being very intentional about saying we want to be clear on what the deadlines are, understanding what your obligations are as a business owner, and making sure you're meeting those deadlines. If any of you have contractors or employees, that last bullet, payroll tax deadline, that's going to be applicable to you. If you are filing payroll yourself, or if you have a payroll company that you're working with, one deadline that's coming up now is March 15th. And that is having your payroll information in for first quarter, so 941s can go out. So this is a lot of deadlines to remember in the midst of running your business, in the midst of meeting with the, your government contract representative as you're trying to get documents over to them, in addition to whatever personal things you have going on. So again, when it comes to being a business owner, everybody wants to be a business owner, but it's not easy. And just this little brief information that I'm sharing with you guys, it's simple, but when you're going through the course of your year, especially as you're trying to sustain a business, this is a lot of information to remember. hence the reason why a lot of people get notices, because they forget about all the deadlines. So in short, if you miss any of the deadlines, you are no longer compliant. And now you risk penalties and interest, which can be tremendous. And once you are assessed those penalties, it is hard to get those waived. And you definitely will need to work with a professional, especially if you got a good filing history. I'll say that any notices that you guys get, whether it's with the IRS or at the state level, I always tell clients, don't take action on it. Get with a professional to really understand what's either being asked of you in terms of if the IRS or the state needs additional information, or if they're stating that you owe. Be clear on what you owe and why. A lot of notices are auto-generated, meaning it could be a simple delay of you've submitted a payment and a notice comes in before the department actually clears that payment. I've had clients that double paid because they'll get a notice and they'll quickly pay, not realizing that it hasn't been processed through the department system. So again, as you're getting information, even though it may feel overwhelming, working with a professional is just going to help to simplify that information. So any questions about deadlines or any notices any one of you may have received? Nope.
So, for me, like my question is, I haven't made any money last year. Like I'm just in, the beginning stages of my business. But
Okay.
my annual, the annual report is coming up,
Mhm.
and the franchise and excise. But since I
Yep.
haven't been profitable, like I still have to pay those, right?
Yep. Yep.
Everything else.
Yep. And that's a great question. I get that all the time. So to be clear, in terms of the annual report, that is just you stating that you are an active business, right? So it doesn't matter if you made a profit or if you've had a loss for the year. You're just letting the Secretary of State know that you're still in business for yourself. So that's checking that box, right? On the franchise and excise tax, and I think I remember you saying you were a single member LLC. So whether you make a profit or you have a loss, your tax is only going to be $100 every year. Okay.
So do I have to file like taxes, federal taxes?
Yep.
Or if okay.
Yep. And you want to
go ahead.
go ahead. I'm sorry.
Now I was just about to say that would be the franchise and excise, right, through the federal and state taxes, and then like the annual report is local.
Yep. So it's three agencies. I break it down that way. So you got your Secretary of State, and that's where you're filing the annual report every year. For you, it'll be $300 every year by April 1st.
Okay.
And then you have the IRS. That's where the federal taxes that you're talking about. And again, I'm going to say it depends on how you file, guys. When people compare their taxes, we're always comparing apples to oranges, because we're looking at someone may be single, someone may be married, someone may have a full-time business only, someone else may have a full-time business and they work a 9 to 5, they may have children. So when we talk, I have a loss on the business. So Jay, I'm going to use you as an example. If you solely have your business, no other income, it's just you, your return is pretty simple. Technically, you don't have to report the losses, right? Because you don't pay tax on $0. You only pay tax on the profit or income that you're generating from, in our subject matter, is going to be the income from your business. But Jay, let's say you have a side job, some type of side hustle, right? You do want to report that business, because those losses are now going to offset that income or taxable income that you're making from that side gig or that 9 to 5. And I've had a ton of people that I've worked with will be preparing the returns, and I know that they have a business, and I'll say, hey, where are the expenses? And the first thing they'll say is, I didn't make any money this year. And my first question to them is, well, did you pay for anything for your business? And they will tell me yes. I immediately let them know we need those expenses, because that's going to help to offset the income they generated. It could be from investments, it could be from a job, it could be if they have real estate that they own. So to ask more questions, but just in short, if you have a loss, you don't pay tax on that. But if you have other income, that loss can offset that, if that makes sense. Okay, perfect. Any other questions about the deadlines or any notices? Perfect. Okay. So this, I think I've kind of hit this pretty hard, but just in general, IRS notices are common. They happen all the time. So when you get a notice, don't freak out or push it to the side because you're scared what the information is going to be. When in doubt, you want to get with a professional, have them to review it immediately, understand what the notice is saying so you know what action to take. And common notices that you could receive, it could be that they've adjusted your tax return. It could be that information is missing. It could be that they are stating that your income was underreported based on the income that they have on file for you. It could be that you've already paid your taxes, but there's an outstanding balance, right? So big part that I want you to take away from here is if you get a notice, whether it's the IRS or the state, read it, work with a professional to understand it, and be very clear on what's the next step in terms of action. But do not get a notice and immediately pay whatever it is, because 9 times out of 10, you're going to overpay. So I want you guys to kind of do a show of hands. How many of you guys know your numbers for your business? And when I say that, AKA, how many of you guys are doing bookkeeping? I want to see some hands. Okay, I see 0 hand, 2 hands.
I halfway raised my hand.
Halfway raise your hand. Okay.
I know the first 2 numbers. So
the first 2 numbers, look, that's some people don't know any.
For me, my profit margin depends on each engagement. So if that makes sense.
Yes, it does. So you
advisor consultant work.
Yep, high level where you stand with the business. So that's good, because again, a lot of people don't know that. So when I tell people to know your numbers, I realize that when I say that, a lot of people don't know what that means. Okay. So to make it very simple, and Isaac, I'm going to use you as an example because you kind of just said it, right? Like you have a consulting business. So you get paid for that project or that contract that you're getting, and pretty much any expenses that you have to pay out of that, that's your profit. Very, very simple, right? But if you and Dr. Jenkins, I'm going to pick on you. You have a cleaning business, right? So yours is going to be more detailed. You have supplies that you have to purchase. You have contractors that you have to hire. It can be a number of things that you have to kind of oversee. So for you, it's going to be more imperative for you to know your numbers, because you could be spending all of this money and not making a profit, right? And if you don't know your numbers, you could be using credit cards to pay for things. Because again, I hear so many stories and people will tell me, I don't know where my money's going. You told me I made this amount of income, but I don't see that in my bank account. And I will tell them, you're not seeing it in your bank account because you're not doing any type of bookkeeping. You don't know your numbers. You don't know your revenue. So revenue is number 1 that you would want to keep track of on a monthly basis. You want to know your expenses. And when I say know your expenses, not just knowing bottom line, I'm spending $10,000 a month, but really knowing how much am I spending on software. Dr. Jenkins, I'm picking on you. How much am I spending on cleaning supplies? I have 10 contractors. How much is that costing me on a monthly basis? Am I charging my contract enough to cover my individual contractors? I've seen that happen to where I have a business owner, they'll make $10,000 on a contract, but when they look at their contractors that they're paying out $20,000. So they're already in the hole. They're not making a profit, right? So you want to know your numbers, because that's going to help ultimately make strategic decisions. Okay. Again, what I said earlier, if you're working on these government contracts, they're going to ask for these financial reports, and you don't want to be the last one holding the bag or miss an opportunity because you don't have your financial reports in order. So when I say financial reports, and some of you guys may be familiar with this, but for those who are not, financial reports consist of your profit and loss report, okay, which is your income minus your expenses. That determines if you made a profit or not. Simple. You have your balance sheet. I, as an accountant, love the balance sheet. A lot of people don't like the balance sheet, they don't understand it. Okay. I'm going to keep it very simple for you guys. Your balance sheet shows you how much you own versus how much you owe. AKA, what are my assets? How much money do I have in my bank account? Dr. Jenkins, I'm picking on you. What equipment have you purchased? Right? That's an asset for you. Okay. Isaac, I'll pick on you. You may have IP, intellectual property, right? That's an asset. And then we go over to the other side of what do I owe? Do I have credit cards? A lot of us are in debt. We're trying to maintain these businesses. We're trying to make sure our people are paid. We're trying to pay ourselves. So, credit card is going to be something you owe. If you have a loan, if you have a line of credit, if you have a partner in your business and you guys are loaning money to and from the company, all that information is captured on your balance sheet. A bank lender, if you're looking at that government contract, whoever's reviewing your financials, these are the things that they're looking at. They may even ask you for your cash flow statement. That one isn't as popular or as in demand in terms of something like grants or government contracts the lenders are looking for. But again, looking at your cash flow, that helps you to determine what money I have coming in to cover my operating, my financing, my investing, and how much money is left at the bottom line. So these three reports are super, super important. So I'll say for each one of you, that will be my challenge. We're almost at the end of this month. So we're really almost at the end of first quarter. So whether you're doing formal bookkeeping or not, whether it's QuickBooks or Wave or FreshBook, I would like each one of you going into next week to just put a time block on your calendar and pull your revenue for January through March, pull your expenses January through March, and do a comparison. Did you make a profit for first quarter or was it a loss? And this honestly is a good exercise because if an opportunity comes up, again, whether it's a government contract opportunity is presented to you and you have a deadline to meet, a grant, it's grant season right now, or if you're looking to get some type of loan, you want to make sure that you're gathering this information. Again, don't be behind the curveball. So use this as an exercise to go ahead and say, let me gather this information. And if you're like, I don't know where to start, I will share a quick secret with you guys because I get, again, clients all the time. It's tax season and they come to me and say, I don't have my books in order. And especially when we're 3 weeks out from the deadline, we don't have time to do bookkeeping cleanup to meet the April 15th deadline. What I tell clients, if as long as you're not commingling, AKA you're mixing your personal and your business money together, you should quickly be able to go to your online banking account, download January through December of 2025, all of your transactions for every business account that you have, checking account, credit card. And there will be an option, a little blue hyperlink that says download, and just download everything. And that's going to be your first step to know, one, I'm confident that I've gathered all of my business transactions. And at that point, all you have to do is put them in category. You can categorize them by breaking them down between expenses and income, but at least you know you have all your information. So that's the hard part. Okay. So any questions about knowing your numbers, or has there been anything that you guys have ran into that's prevented you from keeping your books updated?
Ash, I think one thing that came up for me, and I've had some other conversations with founders about it, is when you're getting your business started and you don't have business revenue, so you're using personal income to get the website up and, do some of these other things. Like, how do you
Yeah.
tell people to account for those transactions where you're using you don't have revenue when you're starting, but you're still having to incur expenses to get things going for the business?
Yeah, that's a really, really good question. So my first suggestion is going to be to have that business bank account open up. And each partner, if you guys are having to pay for things personally, the money that you're going to take, and I'm assuming you're using banking account, right? So if you're using those funds transferred into that business account and then pay it from there. And that way you have a paper trail, right? You know who's paying for what. If it's on the other side where partners may be using their credit card, then that's where the balance sheet is what I spoke about earlier. But you really want to track who's spending what, who's putting money into the business, aka who's contributing money, and who's taking out a distribution. And a lot of people that I've worked with, they'll put that information on a spreadsheet just to keep track of it if they're not able to do those transfers between the business account and their personal accounts. But you want to do some type of tracking as you're contributing money and you're taking money out, because it could be an opportunity also where you loan the business money, and then once you start generating income, the partner is able to pay themselves back. But you want to have some type of tracking system. Again, transfer into that bank account, or just have like a little simple spreadsheet so you're tracking who's putting in money, who's doing the in and out per partner. Okay, any other questions? No, you guys are so excited about this. I see it. I see it. It makes me happy. Okay. So this one I'll just kind of touch on a little bit. Obviously, I love taxes. Like I said at the beginning, I'm big on tax education. So when we talk about having a profitable business, it's inevitable. You are going to owe tax. It's not about how much tax you're going to owe. The goal is we don't want to overpay, right? We want to be compliant. We want to pay in what we need to. But what I see all the time, and everybody's guilty of it, it doesn't matter what background you come from, most of us are retroactive. We're waiting, we're just trying to, survive the business. We're trying to grow, scale, and we worry about taxes on the back end, right? We're just trying to, again, we're trying to survive, and we're trying to make sure we're meeting deadlines. So when you understand the difference between being retroactive and proactive, it makes a sound of difference. I've had clients that come on board with me. We do tax planning. Tax planning is us being proactive to identify early on, how much income am I going to make in 2026? What are my expenses going to be? Let's estimate that out. I don't want a sticker surprise at the end of the year and I get a tax bill saying I owe $10,000. Let me be proactive and plan for that. And that way, if there are some tax saving strategies that I can implement, that's going to be the goal throughout the year as I'm making those quarterly tax payments that I mentioned to you guys earlier, right? So that is essential. And when you start being proactive, it helps you to plan and it helps you to make business decisions. Again, Dr. Jenkins, I'm picking on you because I love cleaning companies. It's because it's so many moving pieces, but it's such an opportunity for you to grow, and you can really, you get 2 or 3 good contracts, this thing can blow up. I had a cleaning company that I worked with, and they were making over $1 million, right? But they had a lot of technicians that they work with. So there was a lot of money going out in terms of paying them. Supplies had to be purchased. I mean, it can be very complex. So using your industry as an example, you have to be proactive because you have to plan out, can I afford to pay my technicians, right? Am I hitting a good profit margin? Okay, I'm hitting a good profit margin. That means that I'm going to owe. Do I have the money in the bank to pay my taxes? Right? These are all the questions that come up. And what you don't want to happen is you fall behind, because once you get behind, it's hard to dig yourself out of the hole. A lot of people fall behind. Again, they're not making those estimated tax payments. They're not doing bookkeeping, and they're overspending because they're not looking at their numbers. And then they come to me and say, where did my money go? And what I'm going to say to them is, did you pay yourself? Did you pay your contractors? Did you pay that credit card bill? If you did any one of those and you tell me yes, that's where the money went. But you have to be strategic. You have to plan, in order to see the growth of your business and to make sure that you're securing these opportunities as they come up. So I've kind of given you guys a couple of stories throughout, but one thing I'll share with you guys, I had a recent situation where a client came to me and it was a fire type of situation. They were working with a previous accountant, had a government contract, they got audited. And from their books not being in order, I think they owed like $28,000. So obviously they want to switch accountants because they don't want to be in that situation again. So we were able to get their books cleaned up within the course of like 3 days. But we had to work very hard to get it done in 3 days. And what we realized was that the books weren't in order. The client was not reviewing the books. So that was the culprit of everything. If the client would have been reviewing the books at least on a quarterly basis, they would have been able to catch some of the issues before they were audited. Right. So once we were able to complete the books for them, they were able to meet the deadline to get their audit done and keep that government contract, because that government contract was the sole source of revenue for their business. And that was tremendous for them because they would have had to pay back more money if they wouldn't have cleaned those books up. On the other side of that, I have a client that I've been working with. They're in the trucking industry. And with them, I want to say they started their business 5 years ago. When we started, they immediately started monthly bookkeeping. And every time we would meet, we got to analyze how much revenue they had coming in. They were able to take those financial reports. They were able to get lines of credit. They were able to get contracts with Amazon, other competitors like Amazon. They were able to hire other truck drivers. They were able to purchase other trucks, all because they had their bookkeeping in order. And every time they would reach out to me and ask for the financials, they were readily available to them. Recent as last week, they reached out and said, hey, we're ready to get our taxes filed. So we're not only meeting the deadline, but I was able to give them a comparison of 2024 to 2025 so they can see how their business has been doing from one year to the next. These are the type of things that you want to look at as business owners, because Isaac said it earlier, I know my profit margin, right? As business owners, we want to know that. Jay, I'll use you as an example again. You may be starting out in all businesses. When we start out, we're more than likely in a loss position until we generate that revenue. But that bookkeeping becomes our best friend as opportunities present themselves, because again, more often than not, every entity that you are trying to work with or secure opportunity, they're going to ask you for those financial reports. So again, remember I gave you guys a little homework. We're almost at the end of March. Track your income and expenses. And I promise you, even if it feels overwhelming, people tell me all the time they're not number people. This example that I gave you about my client that's a truck driver, he loves to look at the numbers now. He loves to look at them because he gets to use that information to determine what opportunity is going to be presented to him. He was in the process, I think last year, of purchasing another truck. Now he's in a position where he may sell his business. Guess what? He's going to need those financial documents. Now we're talking about looking at the valuation of the business. So I said it earlier, know your numbers. You have to know these things in order to create and obtain opportunities for yourself. So when we talk about planning ahead, I've said it several times, so I'm planting the seed for you guys. So I want strategy to be the word for each of you in 2026 when it comes to your business. If you guys implement strategy, you are being proactive. You're getting into the tax strategy mode that I mentioned. We're not, coming on the back end hoping each year that we're not owing tax or we're dreading tax season. We're prepared because we're strategizing. We're meeting deadlines, so we're staying compliant. We're staying active with the state. We're not getting those ugly notices telling us that our business has been dissolved or we owe because we haven't filed something, right? And then the other part, and remember I said it with that client story, reviewing your numbers. Get into the habit of reviewing your financial information. It will help you to make decisions again, I talk to a lot of business owners, and when they're reviewing their financials, they're able to set financial goals for the year. I've had clients that ask me, hey, how do I know when I can pay myself? Or, hey, how do I know when I can go into business full time for myself? Reviewing your financials are going to help you to make those decisions. So you have to plan ahead, you have to strategize. And when we talk about lending, I alluded to this earlier, but this is, and I want you guys to take a screenshot of this if you can. When you're working with lenders, this is the information that they're looking for to approve you. Okay. They're looking at your bookkeeping. So they're going to look at those financial reports. They're going to ask for tax returns. So make sure, and I would say plan ahead. Again, going back to that strategy piece. If you know that you're going to be getting applying for a government contract this year or next year, if you're going to be looking for lending from a bank this year or next year, get on top of it now. Get your books in order now. Go ahead and make sure your tax returns are filed on time. Look at your numbers so you know if your business is profitable. If your business is not profitable, you have a bigger story to tell, whether it's with that government contract or with that lender, on how you are going to become a profitable business, right? So the numbers are going to be important, and it helps you to show that you have financial stability. These are all crucial. If you don't have these things in order, looking at this red denied sign is going to be what you're going to have to deal with. A lot of businesses get their applications denied. Like I gave you the story about the client. She ended up owing $28,000 from an audit because she had to pay the money back because her books were not in order. We actually had to hurry up and get her tax returns filed too, because she filed tax returns based on the old information. So that caused her to owe taxes. So it just becomes a ripple effect. And you just want to make sure that your financials are in order, your taxes are in order, so you can be consistent. And again, just address the issues to make it in, to put yourself in a better position so you can get that approval rating no matter what opportunity is coming before you. So I'll ask you guys this. When it comes to TDOT, are you ready? I've said this several times. You want to make sure that you are keeping your books updated and accurate, right? So if you guys finish that homework assignment, you can check off, hey, first quarter, I'm good, right? You want to make sure that you are compliant at the state level. So that's what the Secretary of State, and that's what the Department of Revenue. Okay. If you are not compliant, when you're working with the government, when you're working with banks, the first thing that they're going to do is go to the Secretary of State's website, and they're going to look to see if you're active. And if you're not active, I will let you know now. You can kind of open up a can of worms, because next you're going to have to go to the Department of Revenue. You need to make sure that you're up to date on filings there. If you're not, now you're going to have to file. Now you're coming out of more money, and you're going to be assessed penalties and interest. Okay. So questions I want you guys to ask, just to make sure you're putting yourself in a position to be financial ready this year. Do I know what I owe before this year is out? That's the first question. And again, you can take a screenshot of this, because I want you to keep this up somewhere. So as you're going throughout the year, you're just keeping track of, you're operating the business, you're working to generate money for the business, but you're making sure when an opportunity presents itself, you can secure it without any issue. Am I paying taxes strategically or reactively? Are my books accurate every month? Could I qualify for funding today? And that is a big one. If you say no, or you're not sure if you will qualify for funding or for a government contract today, that's even more reason to go back up to the first 3 questions to make sure you know what revenue you're trying to get for the year, you're prepared for taxes, and your books are in order. Lastly, do I have a tax plan? Am I working with a tax professional? This is going to determine if you're TDOT ready. Okay. Any questions? Anything that has come up from this? Have you experienced any issues with receiving notices, or just any challenges that you have coming up for first quarter of this year?
Ashley, this is Darius. Can you hear me?
Okay.
Yeah, one of the things that I have like tried to implement this year is staying ahead of everything, just being ahead, staying
Yes.
ahead. And that's not just in taxes, but everything that we've talked about today is having the contracts that you have with the state, having it looked at beforehand, having
Mm-hmm.
questions. Sometimes you don't have a lot of leeway with TDOT projects, and that's why me and Tanisha need to talk because Tanisha has a contract with WeGo.
Yeah. Ooh.
Uh,
Okay.
but we also have just staying ahead of everything when it comes to your finances so that you're ready when these contracts and the opportunities present themselves, like what you're talking about. A lot of the companies we deal with want to go after more work and do more work. Sometimes they're not ready. And that's kind
Yeah.
of even what we talked about at the beginning of the year with some of our workshops. They want to get bonding, but if you don't have your taxes filed or if you don't have certain things done financially, then it's harder to get bonding. So it just kind of, stacks and, what they say, it's kind of like a domino effect, right?
Yeah. Yep.
So it's trying to stay ahead of it is really a goal for this year in all the business practices.
Yeah. And I'll share a quote with you guys. I couldn't think of it earlier when I said opportunity, but a quote, and I'm gonna pull from my TSU alumni bag, but I used it a lot when I was in undergrad. Preparation meets opportunity. So if you guys implement that this year, just like Darius is saying, stay ahead. It's overwhelming. I tell people all the time, we're juggling so many things now, especially like post COVID, but just block out time. If you're serious about your business and you want to grow, opportunities are going to present themselves, but you don't want to miss it because you're not having these things in order, aka the bookkeeping, the taxes, and these things do cost money. I'm not going to deny that, but again, if you're looking at your numbers, it's going to help you plan. So again, when opportunities come up, you can take advantage of them. I think someone else was going to have a question. I think.
I do.
Okay, go ahead, Jay.
So, do you have like a recommendation for like a percentage of how much you should set aside for taxes every quarter, like from your revenue?
Yeah, so I'm smiling because I'm gonna give you the accounting answer again. It depends, right? And I
Okay.
say it depends because it depends on what your overall income is. So when you think taxes, taxes aren't just for your business. If you're working a 9 to 5, again, if you're married and that spouse has a W-2 income or have a business, the taxes are based on the total income of the household, right? My recommendation will be to get with a professional tax person and go over your numbers with them, because Jade, I'm going to use you as an example. If you know that you're going to have a net loss this year because you're working to generate revenue, but you have a lot of expenses going out the door to get the business started, you're not going to have to put anything to the side because you're in a net loss position, right? But let's just say that's kind of the case, but then you get to fourth quarter and you land a contract. Now we got to look at, okay, are your losses for the entire year going to offset that contract that you generated? Or do you have other things that can possibly offset that income, or is it going to cause you to owe? So every situation is different. I would say, one, look at your numbers. And as a rule of thumb, guys, if you're looking at your numbers, I would say you want to look at them monthly in theory, but again, we're all busy. So I would say at least look at them on a quarterly basis. If your quarterly profit is over $5,000, this is where you need to consider putting some money to the side. And Jay, I can't give you a percentage because every situation is different. Some people may need to do 30%. Some people may need to do 10%, right? But I would say working with a professional to identify what that looks like, even if you just do it one time, that's going to help you to get a clearer picture on how much money should I be putting to the side based on my situation.
Gotcha.
Any other questions? Okay. So here, I just want to bring this home. I keep honing in on why you should work with a professional. Jay, you kind of helped me to bring it home too. Year-round strategy is what you want to focus on. So when you're asking yourself that question, how much should I be putting to the side for taxes? One, again, having that bookkeeping in place is going to help you to determine that. But working with a professional, they're going to help you to identify, hey, maybe instead of putting 30% to the side for taxes, you can put money toward a retirement plan. Or you can spend a certain amount on business expenses before the end of the year. If you have children, depending on their age, maybe you can hire them. Maybe it's time for you to consider a S Corp or a C Corp instead of saying a single member LLC. So the strategic side is going to help you to determine what options are available to you, right? And it's also going to help you to simplify those tax laws. Here, I put a code for you guys. I've kind of talked about compliance and just making sure that you're kind of prepared going into this year as a business owner. But just on the individual side, again, everybody's situation is different. So if you have children, if you have multiple business, Dr. Jenkins, I think you mentioned that you have multiple. Everybody's situation is different. So this QR code is going to give you a link where you can access other ways you can maximize your refund and or decrease your liability just by knowing what strategies you have available to you. So that concludes my presentation. I'll open the floor to any specific questions you guys may have.
I just want to say thank you. This was quite timely because, as I
Thank you.
mentioned before, I am reorganizing. And I
I'm
had
glad.
started opening those bank accounts and separating funds,
Yes.
looking into the banks for bank funding. They're
Yes.
offering me a credit card, but I'm like, wait a minute. Now I got to redo the EIN number because
Yes.
everything's in my
Yes.
husband's name. So this has been great. I appreciate it. And thank you,
Yeah.
Darius, for the invite. So
And
thank
Dr. Jenkins, I will share with you because when I hear you talk, I'm an empath, by the way.
Mhm.
So when I hear you, I'm like, oh my God, this is overwhelming. What I tell
Yes.
every business owner that I work with, make a checklist.
Mhm.
Try to keep it as simple as possible. Write down everything that you need to do. When I hear EIN number, that's the first thing that you got to
Yes.
do, right? You got to get that changed over because the bank is going to want that information. The state is going to want that information. You're going to
Yes.
need that for IRS tax filings, right? But just make a checklist. And then if you need to work with a professional just to figure out how to prioritize it, I would say do that. But don't try to take everything at one time. Focus on what's time sensitive. What's going to stop you from getting those opportunities? When I hear you talk about the credit cards and or the line of credits also,
Yes.
talk to a couple of banks. Don't,
Okay.
don't hone in on one bank. Go to each bank. And I tell you, all you guys this, when you're working with banks, ask them, what products do you have for me as a business owner? Ask them about their interest rate. Ask them about their bank fees, right? And do a comparison before you make that decision because you really want to go with a bank that is business friendly.